Assalamu alaikum everyone. Welcome back to my channel Rapid Revision. Today's video is it's a question from May June 2025 paper 2 variant 2 question number 4. This question is based on errors. Like I've always said this that there is one question on errors or errors in suspense in every paper. So you should be very good with error corrections and proper corrections, etc., etc. So if you haven't subscribed to my channel yet, hit the subscribe button for more content from O-level and IGCSE accounting and economics and AS level accounting. Also, if you haven't followed me on Instagram yet, go and follow me on Instagram for more content from O levels and IGCSE accounting and economics and AS level accounting. So the question here says Bilal prepared a trial balance at 31st December 2024. Bilal later discovered the following errors. So error number 1 here is the goods taken for Bilal's own use costing $185 had been recorded as cash drawing. So whenever you withdraw goods for personal use, the double entry should be drawings debit, purchases credit. But what they have done here is they've done drawings debit, cash credit, which is incorrect, of course. So what you're going to do here is that you will debit the cash account in order to remove this from the cash account. So because we credited cash, right? So since we credited cash by 185, you need to debit cash by 185 so that the effect of crediting cash is cancelled. So you debit 185 cash and you credit purchases account because you did not record this in the purchases account. And whenever we buy goods, the purchases account is debited. So similarly, whenever the owner takes out goods for his personal use, the purchases account needs to be credited because those goods are not part of my purchases anymore because the owner has taken out those goods for his personal use. So this will be the correction of error number 1. Okay, error number 2, motor expenses 63 paid by bank transfer had been recorded as 36. So they've done motor expenses debit 36, bank credit 36. They were supposed to debit motor expenses by 63 and credit bank by 63. So how do you correct this? You actually have to. So how do you actually correct this? So we need to take out the difference. 63 minus 36 is 27 and we have under recorded the motor expenses, right? So you need to record this in the motor expenses account by the difference. So 63 minus 36 will be $27. You debit the motor expenses by $27 and you credit the bank account by $27. So this is error number 2. Error number 3. Capital introduced by Bilal 2000 had been credited to a bank loan account. So capital introduced, whenever we introduce capital, bank is debited, capital is credited. But what we did here was bank debit, bank loan account credit. So you now have to debit the bank loan account. So I'm going to record this on the debit side. I'm going to write here bank loan debit 2000 and now I will credit capital because this is capital, right? So you need to record this in the capital account. This is error number 3. This is error number 3. Okay, so the next error here is a purchase invoice 84 from Maya had been debited to the account of Moira and credited to the purchases account. So whenever you buy goods on credit, you need to debit the purchases account and you need to credit the person from whom you're buying the goods on credit, right? Moira is also not the person from whom we've actually bought the goods. Bought the goods from Maya, but what we did was that even if we made the even if we actually reversed the purchases entry also. So in this case, purchases must have been debited, Maya must have been credited, but what they did was they debited Moira and they credited purchases, right? So you need to credit Moira once so that you remove it from Moira's account. So I credit Moira and I write here 84. I need to credit Maya once because I need to record this in Maya's account, and I need to debit purchases with twice the amount. So because I recorded the incorrect amount on the credit side, no, sorry, the correct amount, that is $84 on the credit side of the purchase account, which was incorrect, right? Because whenever we buy goods on credit, we record that on the debit side of the purchase account. So I basically debit purchases once. So this error is removed and I debit purchases again by 84. So that means I'm recording purchases of 84. So now I'm going to debit purchases by 168. So purchases debit 168, Moira credit 84. We removed it from Moira's account and we credit Maya's account and record it in Maya's account. Okay, the next entry here is Bilal's private insurance 130 had been recorded as business insurance. So insurance is an expense account, and if we've recorded 130 in the expense, right, so we have debited the insurance account. That means we've debited this in the insurance account 130 extra. So you need to credit the insurance account. So I will record this on the credit side. I'll credit insurance. And this will be $130, and I need to record this in the drawings account because this is drawings. So we'll basically transfer the insurance into drawings. So drawings will be debited, insurance will be credited. This is error number 5. So that's it for the errors. They haven't asked you to write the narratives, so we are not supposed to write the narratives here. This is for 11 marks. In the next part, they are saying the balance on the capital account at 1st January 2024 was 6,200. This is my opening capital. Before correcting the errors, the original profit for the year was 12,930 and drawings was 11,260. So all of these have been affected when we have corrected the errors, right? So when I made the when I made the error corrections, I have profit is being affected, capital is being affected, and drawings is also has been affected, right? So when I want to correct my profit for the year, I have to decide what all affects profit, right? So whatever comes in the income statement is going to affect profit. So I'll just highlight this for you. Purchases goes in the income statement. Yes. Motor expenses goes in the income statement. Bank loan doesn't go in the income statement. Capital doesn't go in the income statement. Cash doesn't go in the income statement. Bank doesn't go in the income statement. Again, purchases goes in the income statement. Moira and Maya both are my trade payables. This doesn't go in the income statement, right? Cash drawings doesn't go in the income statement. So if you're paying the expense through the business bank account, and this basically is like cash drawings, because the expense that we paid, total expense that we paid for insurance, of that 130 was for his private insurance. So basically we transferred the amount 130 from the insurance account to the drawings account. But again, insurance is going to affect profit. Cash drawings is not going to affect profit, right? So in the first entry, when I credited purchases, that means I am reducing the purchases, right? So purchases is basically added in the cost of sales section. So if you reduce the amount of purchases, your cost of sales will be reduced, right? So once your cost of sales is reduced, your profit because of this will increase. So I will add 185. So I'm going to write here add purchases, and I'm going to write here 185. Okay, the next one here, motor expenses is being debited. Whenever expenses are debited, expense is increasing. When expense is increasing, profit is supposed to decrease. So I'm going to write here less motor expenses, $27. I will subtract this, and the next thing that is going to affect is debit purchases. When I'm debiting purchases, that means I'm increasing purchases. If I'm increasing purchases basically increases on the debit side, decreases on the credit side. So if I'm debiting purchases, I'm increasing purchases, which will increase my cost of sales, and this will reduce my profit. So I'm going to write here, when I'm debiting purchases, this is going to increase my cost of sales and decrease my profit. So I'm going to write here less purchases. So I will write here less purchases 168. I'm just going to subtract this, and then this is going to reduce my profit. The last entry here, when I'm crediting insurance, that means I am decreasing my expense. Okay, so when I decrease my expense, my profit is going to increase, because expenses are subtracted in the after the gross profit. Yeah, expenses are subtracted after the gross profit, right? So if you are reducing an expense, that means you are decreasing expenses, so your profit should increase. So I'm going to add insurance here. I'm going to write here add insurance, and this is supposed to be 130. So when I calculate this, 12,930 plus 185 minus 27 minus 168 plus 130 is going to give me 13,050. Yes, so this is how I corrected my profit for the year. In the next part, they are saying calculate the balance on the capital account at 31st December 2024. So they've given you opening capital balance at 1st January 2024. And now what I'm supposed to do here is that I'm going to add the additional capital. So add additional capital. Additional capital here is 2000 when I actually corrected the entries, right? So in that, there was one of the entries in which additional capital was mistakenly put into the bank loan account. So bank loan account was credited um, when it was actually additional capital, right? So I debited the bank loan account and I credited the capital account. It's right here. So when I credited the capital account, that means I'm increasing capital. This is additional capital. So I'm going to add capital, add additional capital. I'm going to write here 2000. And then profit is always added to capital. So I'm going to write here add profit for the year. So I'm going to basically take the corrected profit from the last part, that is part B. I'm going to add this over here, 13,050. And then I'm going to write here less drawings. So I'm going to adjust the drawings in 1 second. So drawings were 11,260, right? So these were opening, this was opening balance of drawings. And now in one of the entries, I have debited drawings. It's right here. When I debited the drawings account, that means I have increased the drawings, because drawings always increase on the debit side, right? So if I have increased the drawings, I need to add this, right? So I'm going to add 130 to 11,260. So my new drawings will be 11,390, which I'm going to subtract. So when I calculate this, 6,200 plus 2,000 plus 13,050 minus 11,390 is going to give me 9,860. This is my new capital account balance. That is my capital at end. So you guys need to remember this logically. Okay, so this is also the capital section of the statement of financial position, in which you start with capital at start. Okay, so capital at the start of the year, then additional capital, because during the year the owner brought in more capital, right? So that's going to increase the capital. Add profit for the year, because profit increases capital, because again, when whenever profit is made, that is put back into the business, and profit is basically going to increase my capital. And then I'm going to subtract drawings, because drawings is something that the owner has taken out from the business, so it's not part of the business anymore. So that is going to decrease my uh, capital, and then I'm going to calculate the new capital, that is the capital at the end of the year. So this is basically the capital section of the statement of financial position. Capital at start, add additional capital, add profit for the year, less drawings is equal to closing capital. Okay, so that's it for this question. I hope this helps you. Thank you so much for watching.